Hello, fellow traders. 'Tis I, the Rumpled One. Wednesday, June the 27th, the year 2018. Let's talk trading. Why you are not getting better at trading, part 20. I guess you guys are probably going to start taking bets. Uh, will it make it to 30? Will it make it to 40? Kind of like when you're trading, right? You say, hey, I think it's going to make it to 30 or 40. So, along those lines, what we're going to talk about today is one of the reasons you're not getting better at trading is you don't have a methodology. Now, I talked about this before. We talk about a plan. But what I'm going to do is I'm going to kind of put it together. It's called the PDA or PDCA cycle. Plan, do, check, act. So this is one of the things where if you miss one of the steps, you're not going to get better, because what the whole idea is every day is just get a little bit better at something, through the practice of trading. Because I would say trading is a practice, kind of like the practice of medicine. It's the practice of trading. So once again, you plan, and then you do, and then you check, and then you take further action. So for example, you enter a trade because your plan says, if this happens, then you enter the trade. So then you've got your plan, and then you actually do it. But then you check. It's like, is the trade going the way you had planned it to go, or is it going in the opposite direction? So you're checking, you're checking, you're checking. And then at some point, you have to act. Either cut the loss, decide to wait, continue to wait, because waiting is an action, believe it or not, or you take profit. And that's it. So what you need to do is write that down: plan, do, check, act. And you can look that up, Google it, PDCA, and you'll get a ton of information. But that's what you need to do, because if you do that, and you do that every day, every trade, then you're going to get just a little bit better. And in a few days or weeks, you're going to start to see an improvement. And hopefully, part of that planning and doing is the money and risk management. Quick look at the monthly. Guess what? We're still in the monthly wick zone on the dollar yen. Now, see, the reason I like to stick with just one pair, at least for the entire month or longer, is to show traders out there that you don't have to look for the pair of the day or the stock of the day or any of that. You don't have to do it. All you have to do is just focus. So by just trading one pair, I cut out a variable so I can be focused. I don't have to flip between screens of different pairs or try to look at different pairs at the same time. If I look at different pairs, it's not to be trading them, but maybe to get a better guess. Like sometimes I'll look at the dollar Canadian and the euro yen just to get confirmation of the movement, but not often. I've even written an indicator. We had the euro dollar, the dollar yen, and the euro yen, because euro yen is basically one of those hybrid pairs, a cross between the EUR USD and USD JPY. And so you can see sometimes there might be a little lag or discrepancy that's going to have to be made up. That's more of an arbitrage thing. Anyway, back to the point. And you can see here we still have that one pair that hasn't filled for the week. And you can see here we exited the weekly wick zone to the bottom. We had let's see, we got the high, we got the low at 36. So that was about 16 pip trade, anybody taking that trigger. And then we reversed out of the wick zone, coming back the other way. So once again, you know price doesn't like staying in the daily wick zone. Ditto on the weekly. Not so much on the monthly this month because we've got some pretty long wicks there. And we look at the daily right there out of that previous day's high. See here, it entered the wick zone, came out screaming through the candle body, through the wick zone, and we're sitting at 110.36 right now. You can see we've got some nice ranges, 80 on the dollar yen. Buy zone, there was your trigger. Right, that's the future pivot for tomorrow. So you see here, there was the trigger, but first trade's usually a pivot fade. There we had it right there. It was only worth 5 to 7 pips depending on which way you went, unless you jumped in at that open. You see it went this way. Red H1 at that open would have been a nice trade. Harry hindsight, right? Because, you know, we don't do this every day, so that's a Harry hindsight trade. Here we go again. Trigger, short, trigger long, profit to be had. Rat zone. Right now, we're in the red rat zone. So you look for short opportunities here. And right there, you had it right there. Green, red, short at the low. Turn trade, rat reversal trade. You could be sitting in the trade waiting for profit. Once again, pivot was hit. You can see we're at R1. Weekly R1. The weekly pivot. Pivot was taken out. I don't know why these, I must be hitting these Alt T by mistake. See if you hit Alt T, that comes up. Hit it again, it goes away. Okay, 3-ball red at the line would have been good for 10 pips. So 2-ball green at the line. Once again, just having these simple trade triggers. Nothing fancy. But just pure price action. Once again, price action at the lines. I know it's repetition, but I say it every day because that's what we want. We want to find things that repeat every day so we can put that in our plan, do, checked, act list and execute. So whether you use the previous day's lines or you can just use every 10 pips, every 2 pips, every 5 pips, just whatever you want, that's how you do it. The wick zone, once again, price doesn't like staying in the wick zone. You see it every day. It's just such a simple trade. It really is. And it's statistically sound. The holo setup, you can see here. That's kind of interesting. I wonder to switch time frames. It looks like it didn't refresh. There we go. You can see the holo. Highest open, lowest open. So this was one of those. Didn't quite get to 50. You can take that trade, and if it goes the other way, you could have stopped out with maybe 3 or 4 pips against you. It was one of those. If it doesn't hit 50, it's going the other way. and it just stalled and reversed, and you saw that was the top of the hour. So if you break it down to a 1 minute chart, you can see what happened. And it fell hard. Must have been some news or something for it to fall that hard. Somehow the video stopped. I don't know where it stopped. So if I repeat myself, sorry, but wick zone, price doesn't like staying in the wick zone. Switch to M1 to show you the price action here at that highest open, lowest open area. We can switch back to M15. There you have it. You can see here we've got selling going on, looking at the tick chart. Inventory reduction bars. There's a short happening right here. You see the green trigger here. Short trigger, we would have reversed, maybe stopped out, jumped back in, and boom, as John Madden would say, boom, right? There you have it. Looking at the open high close, or actually just the open high and low for the daily, weekly, and monthly. You can see here we made a daily, weekly high and reverse 15 pips off of it. I left the computer on for a while. You can see the Einstein line here. There was a short, and then boom, it came back. There was your long. So once again, relative to when I started trading, which way is price going? Well, price is going down. Then it came back. So right here, there was profit to be made. And then right here, which way is price going? Boom, hit the line. It's going up. Once again, which way is price going? It's very, very simple. So just by sitting here and using relative to when I started, there was 2 profitable trades. Once again, these aren't squigglies. This is just the previous high, previous candle's high, and previous candle's low. Actually, I made a dots indicator that shows that too. Maybe I'll put that up next, add that to the list here. And then you can see it. And just looking at the spread dots here, you can see came above that low, hasn't quite gone above that previous high yet. To get confirmation, we might just see it here. That 110.37, you see, we took it off. We could have been in the trade from at the tick chart, but right here, you might be thinking take profit if it doesn't break that high, because it could continue down lower, or it could break the high and we could have a nice upward movement. And we've got about a minute left in the video, so let's just see what happens. So you see here, it didn't quite break that high. Selling kicked in. So right there live, no Harry hindsight, you see what happens. So it stalled. If you were in that trade, it was probably worth about 3 or 4 pips. So, fellow traders, as always, you need to plan, do, check, act, and remember, it's not what you trade, it's how you trade it. Let's go drain the banks.